the 10-year yields on a weekly chart here, we're looking at wave 1 and 2. And wave 3 here, we're looking for wave 4 to pull back into this box here. And this would also be the wave 4 of one lesser degree here as 1 and 2. And then 1, 2, 3, 4, 5 for the third and fourth. So 1, 2, 3, 4, 5 for the third. Looking for the fourth to pull back into this box here. And that will be confirmed if the market it takes that low out there. This is a weekly chart, so we'll go to the daily chart, but looking for 5 waves down for wave 4 here from the top here as 1, 2, 3, 4, 5, and then wave 5, and then a larger ABC, and then further to the upside. It is possible, as I keep mentioning, that that we can have this as an A wave, a B wave, and a C wave, and that's the end of the rate rises, the yields in that sense. And yeah, we noticed in Australia yesterday the RBA didn't raise rates, but they talked about doing that anyway. But yeah, just chit chat on the daily chart just to have a closer look at this situation here. We're looking at just put that somewhere. Where have I got that? I'll just leave that there. That probably belongs there. The A wave, the B wave, and what I can say is that, whoops, daisy, what's this here? We don't need that. If where's my drawing tools? Over here. If this low here is breached, that low here, then we're going to have 5 waves down, as we talked about over here. That will mean that we'll have, let me just get that right. So that will be to here, 3, 4, 5 coming down here. We'll put that in. I think that needs to go into, we don't need it on those, and we don't need this. We need it into minor minute degree was what we were looking for. So we look for, so this is our box down here. So if this low is breached, this one here, right, then we can look at this as wave 1 here and wave 2 here with basically an A and a B and a C wave here. And if that low is breached, then we'll be looking at wave 3, 4 and 5 to move down here. That will make wave C of 4. So an A wave, a B wave and a C wave of 4 into that space, coming down to the wave 4 of 1 lesser degree. So we could actually lift that up a little bit in here. It's more important than this here. And yeah, so but anyway, we just track 5 waves. So wave 3 should be the longest, and wave 5 here should be much the same length as wave 1. Now, all of that said, that low needs to be breached. If that low doesn't get breached, that means that we just go straight up from here. That means that the A, the B and the C is complete on this low, and this would be wave 1 to the upside, back for wave 2, and then we'd be looking up at 3, 4 and 5, moving up here further. Okay, so I don't know what's going to happen, but if that low is breached, then the structure, the pattern would be further to the downside at that point. It's kind of that simple, really. So, and I think that's correct, you know, if I had to take a guess, I would say that's correct, because we're looking at the dollar to move down. So this will be the US dollar here. So the time that the US dollar hits its wave 1 down here, then the yields will be at that wave 4 at that point. So we're looking here as 1 and 2 and 3 and 4, and coming down here for wave 5. And then we'll have our ABC and then down again. Now, obviously with this, we're trading, while this is moving down lower here, we're trading indices to the upside, we're trading FX to the upside, we're trading gold, silver to the upside. And when this completes down here, when we count 5 waves from wave 4 to wave 5 here, then it hits a brick wall, and then we'll see this bounce here. So while this is the commodities video, so while this is moving down here, we're going to see that's obviously going to support commodities and FX and other markets in certain ways. You know, some are a direct reflection and some are a bit wishy-washy and all the rest of it, but it does offer that 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 rebalance in pricing in that regard. So based on this, we'll just go into, I think I've been working it on the 10K, so going from 50K to 10K. I'll just point out, I don't think it's the case, so I won't go there actually, I'll just stay on track here. So this is my mess here, but just in a nutshell, we're looking at from the wave 4 here is 1 and 2 and 1 and 2 and 1 and 2 here. We're going down into the third wave for wave 3 and 4 here to make wave 5 here of wave 3, and then 4 and then 5 for third, fourth and fifth, into what I call group 2, the 98 to 96.50 area here that will play out as support. Now obviously there's lots of support coming into the previous low, and also such a nice big number with lots of zeros on the end is going to be a sticky number. That said, we are right in the middle here. If I look at from wave 4 to wave 5 here, this would be right in the center of it here, because this is 1 and 2, 1 and 2, 1 and 2, and into the third here. So now we've been in 1s and 2s, and now we'll be in 4s and 5s in this area. So yeah, that's the middle of it. So whatever time that took to get to here, we could pretty much grab that pattern here, flip it over on its head and bring it down here. It'll be pretty much a mirror image, but it won't be a mirror image because wave 4 is normally quite complicated when wave 2 is simple. But this does give us a really good guide stick for gold to move up higher. Now it won't be that simple, as I said, because we've got a lot of support in this area here. Now it'll either be a hot knife through butter because we're in the third of the third of the third, or these numbers are going to come into play here. The alternative count is our old count, where we still have this move up here as the A wave up here, a B wave down here, and then a C wave over here coming, B wave, some awkward B wave coming into this 100 area, and then wave C coming up there. It's possible. I don't think it's the case, and the reason I don't think it's the case, well, I have to stay with the FX market, the sterling at least. That was the first one that gave me the inclination that this was the wave 4 here, and now the euro's just confirming it now, but the pound is definitely confirming it. So we'll go with this until proven otherwise. Yeah, so gold and all that will be zooming to the upside. But when this market here hits these, this 100 here for the Dixie, then that's going to slow it down somewhat. So that said, let's go over to the gold market now. I don't really have an answer. I can see that this can be counted in different ways. So what I'm going to do is revert to my primitive mode, and that would be that from this low here, I can clearly see 1, 2, 3, and it'll be 4 and 5 pushing up here. So once those 5 waves have done here, then anything above that, then I can eliminate this particular pattern here being a triangle for wave 4, and A, B, C, D, and E here. So as a wave E here for wave 4, then it'll be 1, 2, 3, 4, 5, and that would be the end of it. So if we see a move that comes back that's corrective, and we see a move that goes up here, then we can eliminate wave 4 from being here. And if we eliminate wave 4 from being here, then we can come back and have a closer look at this. Now we can look at this is corrective. This can be counted as 5 waves here. This is corrective. This can be counted better as a corrective wave, but I see 5 waves in there, 1, 2, 3, 4, 5 in here. So possible. But if we eliminate the wave 4, then we'll be left with 1 and 2 and 1 and 2, and this will be a third wave here. Then there'll be a fourth and a fifth. Because if that dollar's going to drop, well then that's going to reflect back over here for this. It's going to rebalance that price. So that means we won't pull back here. But once we get that top in here, that 5 waves here, then we'll be making some decisions about what's going to come next. We will have a blind spot while this is moving down here. I may have to reorganize this in terms of putting wave 1 over here for this. I don't want to go there just yet. So really I just want to see this finish here. What I can say is that we're going up higher. That's not a problem, right? And if we do have a wave 2 coming back, it won't pull back down here, unless we've got a B wave. The only way that we're going to pull back really deeply in here is if this currency, this dollar here, we've got this alternative B wave in here. But I can't really see how that fits. You know, I can make it fit. I can go an A wave, a B wave, and a C wave here for the A wave, and then a little B wave here, which doesn't make any sense, and then 5 waves down. It just doesn't make any sense. It doesn't give me a lot of things. So I think I'm on the right track with this going down, and if this is going to go down, then we're going to see gold push up further from here. So this top here after this little 1 2 3 4 5 here is going to be significant at this point. Yeah, so I might have to redo all of this here, and normally we'd have, you know, at the level here we would normally have the arrival, the reaction, the first high above the level, the ABC pattern here, and then we would look to go long at that point. That's the most common pattern. The second most common pattern is if we come to here, 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 and then have some sort of ABC pattern that sits on here and then just goes straight up at that point. They're the two patterns. And this one here is not as common as this one, but when you get a build up underneath here, it becomes a really good support over here for it, you know. So it can just keep stepping to the upside at that point. So, and this, you know, this is also an accumulation process here, which is really reflecting now as a distribution process there. So we'll just see how that goes. We'll be ready for it. Like I mentioned, to trade gold stocks, NCM, NST, RRL, or if you're in the US, of course, or Canada, the ABX, and so on. Go for producers at this stage rather than explorations. Yeah, so that's that. And this is GDX here. GDX is a little bit different. First of all, what's different about it is that this low here made a low here. It didn't make a low on the spot market. Reminds me what the difference between the pound and the euro dollar, but that's another story. But same thing. So in this case, it's a little bit the way that this is structured here, the way that this is building on top of each other here. It's I can't put wave 1 up here. So in this case, I have to put wave 3 here. So I'll put wave 3 up here somewhere. So in this case, we've got 1 and 2 here, and then we'll be looking up for wave 3, and then we'll be looking at 1 and 2, 1 and 2, 1 and 2, da 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 da, and we can look at the levels trading to the upside. So once we've got 33 established, the next number is 35. There'll be some little dance across there while US spot gold finishes its 5th wave, and then we've got 38 here, and with 38 we can look at group 2 within that space there as well. But yeah, this is where this is at the moment. So buy gold. Yes, this is a long-term trend, so this is good. We'll see how this plays out anyway. That's looking good. So that's that. And silver. So silver here, we've been looking at it here as, well, wave 2, wave 1, and wave 2. And I've just got a few ones here. I'll talk about those in a moment. But basically 1, 2, 3, 4, 5 for 1 and 2, as we've always had it. Then 1, 2, 3, 4 here. I'm going to look at this as 1 and 2, 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave for wave 5 of 3 here, then wave 4, and then 1, 2, 3, 4, 5. And the reason it's not such a good look and feel here. I could do something else with this, but I'm going to do this because this 1 and 2 and 3 and 4 and 5 here will be the same as this one here in gold, 1, 2, 3, 4, 5 here. And this would be the opposite of what's happening in the dollar as well. So that's the reason I'm counting. Now I do have another count on the side here that can keep going, but it doesn't really matter at this point because there will be a wave 4 and a wave 5 here, and there will be this top, and there will be a second top here, and we can go long here again, and we can go long here again, and we can do all sorts of things, but there will be some sort of dance across here. It's how far it pulls back is the question. Do we look at all of this as wave 1 up here, and will we pull back at this point? How far will we pull back, or will it just be a little correction and then we'll move up again? So we'll be ready for both of them. That's all. Okay, moving along a little bit. I'm just going to put that chart down. I've got a whole heap of charts all stacked up in certain orders and those sort of things. So over to the energy. Now we're going to do the energy, or we're doing the other one. We're going to do the other one first. So the green metals. So we're going to come back over here. We're going to go to copper first. Copper. Where are we here? I'm staring at it. Oh no, there it is. So we talk about this in the Australian market. So, you know, every day. So I don't think we need to make a big sort of deal about it. But basically, we should see some support come in now that the US dollar is moving lower. And we didn't really see that last night, but that's okay. We can still look at this as probably, you know, I was looking for another little high here. I haven't got it, but I probably made a mistake, and it's probably wave 1 and back for wave 2. So we're just going to chill on that. And this will be the same for these US markets as well. We've got little impulse wave here and here. We're doing a little dance across the 40 here, which is a medium level. So we don't have a clear 5 waves up here just yet. So it could fail and move down. But with copper and most of the stocks, we're looking at 1, 2, 3, 4, and 5 to move up for wave 1. And I really hope we get that, you know. Yeah, it'll be great if we get that. You know, we're looking at, just bear with me for a second, indices. This is China here. This is just go to the monthly chart here. They had some really good figures come out for their PMI and all the rest of it. But from what I understand is that the good figures that came out for the economy wasn't from consumer spending from inside. It was money being moved into infrastructure. So that's why it's sort of doing well. This is a monthly chart. This is the compositive here. Normally we look at the A50 and they're all slightly different in their own way. But we've got this triangle pattern here that could be completed at this point. You know, it may be that the E wave needs to come down here. Another leg here is an ABC up here for this, and then an A and an ABC for a thing here. So I need a little bit more time to work this out. But on the daily chart, this is still going to the upside. This is a corrective pattern. So at some point in the future, we'll be taking that top out. This is corrective. There's just, you know, it's just the way it is. So yeah, positive thing. We can see, you know, volume coming in here as well. This is a good thing for commodities. It's got to be, you know, and like I said, the figures that have come out, they're coming out positive because of the money that they're pumping into the system. You know, this is a weekly chart here, so the trend here is, you know, pushing higher. It looks like we've got a little sort of rough wave 1 here, and it may be a 3 and 4 here. It doesn't matter if it's 1 and 2, 1 and 2. It's still pushing to the upside at this point. So that's all positive. And so back to this over here. So if we could get, you know, if we can, I just can't confirm it yet, but it'll just be nice if we can get that wave up here. So 1, 2, 3, 4, 5, because that will just be so positive at that point. It'll be like this, you know. It won't be a big pullback. It'll just come back to the wave 4 here. So that puts you know, the commodities into a bullish, you know. I know they use super cycle in general comment across the web. As Elliott people, we break down these cycles, but certainly will be in a primary degree cycle to the upside, if not cycle degree. So yeah, so that's pretty much the copper story, you know. Nickel's not so happy, actually, unless I'm missing something, and if somebody can see what I'm missing, that would be fantastic. But this is the nickel picture here on the daily chart. you know, I've tried to look at this as a bullish pattern to the upside. I just can't do it. Maybe it is, maybe it isn't. It just seems to be better as a corrective pattern at this point in time. And yeah, and this move down through here, you know, should take out the low here on this. But, you know, there's a lot of support coming in around this level here. I mean, I can't see the support, obviously, but we know that it's there because of this pattern, this here. So it could be something that, you know, as I mentioned before, an A wave to here, a B wave to here, and a C wave up here for this, and then we go down into another picture. I don't know that. It's something that, to me, is just in the guessing game of things at this point in time. I'd need to see more. It does appear that we've got a little impulse wave here, but I just thought it's just always natural to have a bounce off a large number, you know, and I thought this bounce would give us something like this here for that wave 4, then down to wave 5, then this wave 4 here would go back and be a 60% bigger than this wave 4, and then come down and finish here, and then we can make them, then we can all go down to the pub, you know. So yeah, this job's not done yet, you know. I think it's like this for such a long time, you know. You know, after 3 waves, this is 1 and 2 and 3. If we go past 3 waves to the upside, then we can look bullish, but I can't say that at this point, you know. I mean, I have to see it then to believe it. So yeah, so we just have to wait this out. I mean, it could even just move up from this one. It could have an ABC here, because really we could look at this. I mean, that's a bit of a 1, 2, 3, 4, 5 here, but that's also, I could get that as a B wave too, I guess. So an ABC here. So I could put, I could be conservative and put that over there. I could do that. That's 1 here, and ABC for 2. But yeah, you know, I can go in and research that and all of that, but the main thing is that we don't really have a large enough impulse wave to the upside. You know, we kind of need something like this a little bit, you know. We don't have that. We have the first leg, and we may get the second, the third, but we may not get the 4th and the 5th wave up here. And if we do get 5 waves up here, then we'll go with that, you know. Yeah, I just think there's a bit more to this, and so that's nickel and lithium. So how are our Chinese friends doing here on the lithium side of things? So basically, with the lithium side of things, it's been in a bear market for a long time. This is just another company doing stuff. So, but an A wave, a B wave, and we've got to kind of figure out some sort of C wave here. You know, I mean, normally when you've got, you see how this is overlapping this one here, and this one's overlapping this one here. It's normally like these will be 1s and 2s, or 1 and 2, and going into the 3rd wave here. So I just still see it coming down further. I see this coming down. It's kind of like with nickel, really. There are some Australian stocks that are looking a bit more positive, but this is, you know, this one and this one here, these 2 here, these are the biggest ones out of the bunch, you know. Obviously talking about a bullish move in there, but we'd have to get support on that level to do that, and we don't have 5 waves up here at that point after that, so I'll just remove that. This is 3 waves here, so it's likely to take this. So if it turns into 5 waves, well, I'll get a little bit excited about it, but you know, it's basically pointing down, isn't it? You know, and what's happening at the moment is this 80 here, you know, this is quite typical of, you know, becoming resistance here, come down for the bounce. It was quite a big bounce in this case, of course. Anyway, came down for another smaller bounce, came through, it's retesting it here. If it takes out this low here, then it's going to leave the 80, and then it'll drop down to, you know, 65 at that point. There's some other important numbers in there, 72 and 70 in that, of course, but 65 will be the next number at that point. So yeah, it's all on the bearish side at this side for those. Now, all of that said, the US dollar can help firm things up a little bit for that. But I think I didn't really spend a lot of time on those, and I'm okay with that because there's nothing here, nothing there to see. I think the focus should be on gold, while the US dollar is pushing down, and also crude oil, and we're not quite there with natural gas yet. So with crude here, we're looking at a low being in place. I don't know if it's the low, but a low. And then 1 and 2 here, as we've been working with over the last wee while. And then 1 and 2, and then we've been counting up as 1, 2, 3, 4, 5. So we're in around here last time we spoke. So, yeah, so I suppose we've got to put this wave 4 in here. It's a little bit small, I have to say, but compared to the previous wave 4, it's still a bit small, really. So I could probably wingle it around another way. But when you got the gap there, I don't know if that's 1 and 2 here, and then 3, 4, 5 for the third wave. So I don't know if this is actually correct. I mean, it could be that this goes to here, and this goes to here, and this goes to here, and then we come back. But one thing I do know is, one thing which is good, is that we've got that there as some, here's all 1s and 2s, right? Now we're getting into 3s and 4s, 4s and 5s here, as we call them, 4s and 5s, 4s and 5. So basically what it means is that the low here of wave 4 here, it's not set in stone. This wave 4 could, come down a bit lower. But generally speaking, they don't drift far past the series of wave 4s. They all kind of line up. Well, I always find they a bit more of an angle most of the time building up. So what you could do is look to go long, and look to go long, and you can just build in steadily. So what I mean by that is that in terms of the trading levels, we've got group 2 here, the major level here, and then between 8 and 9 here, we've got the Fibonacci numbers 1, 2, 3, 5, and 8. I know it's complicated. And then 650 and 72 in there, close enough. So they're all our minor levels within inside that major level and medium level there. So what I normally do is that we're basically expecting to go from $80 to $90 in one way or another. So the idea is to build in the beginning of the trend from this one to this one here. Now this could take us up to here, and it probably will. Let me have a look at the length of wave 1 here. Is that wave 3 smaller? Let's just double check that little thing there. That's that. Sometimes it's a little bit illusionary. So wave 3 is bigger, but that's good. But that means that we can look at this being, we can at least get to here on that. So we get to group 2. Anyway, what we normally do is we look for, we build in trades, small positions on 1, 2, and 3. So here now, right, on this one here, we would get our first small position here. So, yeah, and sure, this may come back down here. This may be an A wave and a B wave and fail here and come down. So to stop the failing point of view of it on the 100 here, or on the $81 here, right, on the $81, you'd be looking for a classic trading levels pattern. So the arrival, the reaction, first high above the level, the ABC, and then so you look for that reference point above there. Now this one here could go above the level, it could fall short from the level, it'll be in here somewhere, but you don't have to worry about it too much. It's this one over here you want. So if we're at 81 here, for example, 81, this let me just explain something else. So so between, let's just get this sorted. So we've got 81 here and then 82. So between, let's just give this some definition here and give it this one. So between 81 and 82 here, because we're talking about group 1, so 1, 2, and 3 is group 1, but between 100 and 200, we also got group 1 as well, the next degree smaller. So we'll have 10, 20, and 30 here, right? That's group 1, and then we have the 5. So 1, 2, 3, 5, and 8, and then we can go into group 2 here as well, which would be the 65 number and the 72. I'll let you handle all of that. Now, if this moves, now we're trying to find support on 81, right? We're just refining what we're doing. Now, this market, if we're not going to get a little classic trading levels pattern here, we could look at this as the arrival, the reaction, the first high above the level. However, if the number 30 here, the 81.30, if you get a classic trading levels pattern on here and that 30 becomes the tested support with that classic trading levels pattern, then what it's telling you is that it's leaving the 81 and it's looking at the 81.50 at that point. So the 3 is so important. It's just telling you that you're leaving this number at this point. And it looks like here that we've got 1, 2, 3, 4, 5 coming up here. So it's likely that we're going to see a move up here, and then we're going to see this here. So that's why it's kind of important to wait for the right. You could do the counting in that. You can check that out yourself. But what I wanted to also talk about as well is that it looks all a bit messy in there, so that's why you go to a smaller degree and all the rest of it. But basically this is, I'll just put this in here. So it's on this second one here that you can go long on at this point. Now I'm going to remove all of these, let you do all of that. So we're going to go long on the B wave here. So if this is 1, 2, 3, 4, 5, so you can count, see if you can count 5 waves up here. There'll be a beginning, the middle, which is there, and the end here. So you can look to build in on that. So that's all good. And yeah, the other thing is that what I wanted to talk about was looking at a different way of, because if you're trading the futures contracts or CFDs or some leverage derivative thing with overnight financing costs, it's because it's quite a long trend that we could be in here. Then you don't want it costing you holding it. You know, that's just it's not good. So this is the USO, the US Oil Fund. So we could do the same thing here as well. So we've got the same pattern to the upside, wave 1 and 2 here. I haven't gone into a smaller version of this here, but we could do that right now. So let's just jump to 100 ticks and just see what that looks like. We might even go smaller. 100 is not too bad, is it? It gives us a little bit of body there. So we're going to look at that as 1 and 2 here, and I'll just put these up here while we're here. I'll come back to those later. This will be wave 1 and 2 in here. That's cool. And then we're looking for 1, 2, 3 in here. And now, because you don't have leverage, it's not going to cost you to hold it overnight, but it doesn't really change your money management rules of how much risk you can take on and all the rest of it, you know. This will be, so we can just still stay with this for a moment. Let's just, this will be up there, we can put that up there. So just want to have a look at this here for a moment. It looks like here that that's 1, 2, 3, 4, 5 for 1 and 2, and then 1, 2, 3, 4, 5. But that also looks like a B wave and a C wave here. So we could just go straight up from there, even if that's 5 waves. The 38.2% retracement levels back at the 69, so it's possible to come back to that point. So in this case, let's just put this in here so we know where we're at with that. So in this case, we're kind of, so it can pull back that far. I don't think that it will, but it could certainly have, obviously it's not open at the moment, it'll probably gap up. So from that top to that bottom there, you'd have to say that's halfway back up, wouldn't you? There. You have to say that's halfway back up. So you could glean if crude oil continues to the upside in the Asian session, and when this opens here, you could get a part position here, and it's kind of a nice place to get it because we're at this. The closest largest number is 70 here, so that's a nice number to nice big fat juicy whole number to work with. And the market seems to like it. It's sort of sticking there, isn't it? Now, like I said, it could drop down here, this to this wave 4. So the length of this length here would be roughly, take that with a pinch of salt, to this one here. So it doesn't have to come back here. But the support, the first real support, is at number 8 here. Of course, number 9 will offer support, but this is where it starts. And this 65 is part of group, part of medium level at that point. What I also want to talk about is that if this is 70, this will be 1, 2 and 3 here. 72 is important, but we won't go into that at the moment. 75 and 78 here. So what we want to do is, if crude oil continues to move up in the off hours, then the idea would be to build some small positions in here, and you got to get them in. You have to get them in early here, because this wave 3 up here will end up coming back into wave 4 here for this, you know. So you want to get a couple here, leave it. You could probably take some money off the table up here. You could take all of it off if you're that way inclined, or you can at least take a percentage off, and then you can put that percentage back in over here as well when it pulls back, and this will move up. It might even be a little bit different from all of this. I'm not that convinced that this is the top of wave 3 yet. You know, we could actually have wave 3 here, then back, and then up again here. But the thing is that it's trending up, and all you have to do is hang on for dear life and do not overtrade, so you can take the heat on whatever mistakes are made. You know, it's easy to be in a nice bullish run like this and lose money. I mean, I've done it. You know, I mean, everything that could possibly happen to a twit like me can happen to anybody else. And yeah, I mean, it's you know, even though you might be smart, you know, you might be an engineer or an accountant or this or that, and but the market is the boss, and that's it. So anyway, just shooting the breeze. So today we introduced the USO, so we can trade crude up without paying any financing costs. So I'll leave it at that for the time being for crude. And then we come over to natural gas here. So with natural gas here, there's a couple of things that can go on here. So from this gap here, it looks like on the sort of the futures here, I could go 1, 2, 3, 4, and then 1, 2, 3, 4, 5 here. Not very good as a impulse wave and a corrective wave here, but you could go take we were thinking about going long here on this one, but we could go. You can get a small position here on that, but this one here may turn into a loss. So the situation is that I'm going to just move this out of the way now, and we're going to go to the counterpart of what we just had a bit of a look at then. So in this case, we're going for UNG, the United States Gas Fund, the same as that USO, and we're going to look at this here. So now the move down here from the top up here, there's a couple of different ways to count this initial area through here, but the reason I counted it as 1, 2, 3, 4, 5 here, and it doesn't count very well, and there's overlap on 1 and 4 and all the rest of it, but I couldn't count it down as wave 1 to here with an A and a B and a C wave here, because it just doesn't fit here, because we've got 5 waves in this move here, and this is the actual high here, this one here. So it's not really, so I've gone that way with it. I've gone through all of this. This is all sort of, I'm okay with it. So I'm still left down here with wave 4, and I'm still scratching my head thinking, do we have a low in place or don't we? Because I could go wave 3, wave 4 here and bring this wave 5 over to here, right, have the low in, because we just counted up 5 waves on the sort of futures here with this, in this case here, it's 1, 2, 3, 4, 5. But I don't know if that's, I'm not getting 5 waves. This is a lousy 5 waves, but I'm not even getting that in here, you know. So I'm not getting that. It's not what I'm seeing here. Here I can count this down as 1, 2, 3, 4, 5 here, and then I can see I've got little 5 waves in here, but this would be the A, the B, and the C wave up here, then down for 1, you know. So I think that we could still come down here for this. So we're going to buy at 72, so we can just leave that there for the time being. We're going to trade in this market rather than natural gas because we don't have to pay that interest cost. And yeah, so yeah, this is important too, the 650 here. It's a medium level. So if you have a look at any stock that you want around the world and have a look at them around the $6.50 mark, draw a line on there first and have a look, and you'll see the importance of it. The pennies will drop after a while. So it's a useful number, and what we'll do, hopefully, let's just let's just assume for a moment that this is wave 1 and 2 here. That means we're going to have wave 3, 4 and 5 down here to come into 62 here, $6.20, which in geometry terms is the 61.8%. So that should be a nice support area. And then hopefully, if it comes down here, we can use the 650 to play out as a classic trading levels pattern, and then we can build our long trades in the market to the upside at that point. So that's what I'm sort of thinking. So we just got to be a little bit sort of patient. So yeah, yeah. Anyway, that's all good. We'll just see. So in the meantime, if it moves above the 7 here, then we'll need to be long at that point. Okay. Yeah, that's it at this point. I'll talk about the bigger picture again in the next video, but we're just really focused on this little area here. So the takeaways are that that crude oil is a nice long-term trade, and we're going to use USO to go into that. So just feed it some crumbs at this stage. And gold stocks will be good. We're going into a longer term trend. We can see that with GDX. Once again, small positions in stocks rather than the futures market. And we did do silver, yeah. So yeah, that's all good. So basically gold and silver, and the US dollar is confirming that. And oil is good, and gas is heating up here. So all good. That's the story today. Okay, so thanks for tuning in. Cheers.